Welcome to the black hole of real estate. Hey, we've reached episode 10. This is Ron Wojciechowski, and we're going to be talking to you today about what the heck is going on in real estate and why people are acting like COVID really just never happened and what's next. Let's face it, there is a lot of unrest in the country about a lot of things, and that's not what we're here to talk about today, other than to acknowledge that looks like change is on the way, and it seems like that's going to be a good thing. The real estate market right now, to put it in a nutshell, and it's a little bit nutty out there, is that the number of properties being sold is down, at least as looking at the month of April and probably in May. But the median price continues to hold firm and may actually even have a little bit of an uptick right now. And this is critical. If sales are off and prices are still holding firm, that does not suggest that it's going to be a buyer's market anytime soon. So if you're holding out for a super good deal and you want that $200,000 property for 100 grand, we still don't see it. There's no evidence that that's happening out there. So what I do know is that rates remain super low. Inventory is not increasing, and yet properties are going off the shelf. What we are finding is the inventory levels have dropped the last couple of months, and unless there's an immediate resupply of homes, that condition is just going to get worse. So what does that mean to you? Well, as a buyer, you've got less options. You just do. So even though it's compelling to see a interest rate in the threes, and a super good time to buy, and there's equity in the property, and you're ready to go, there's pent up demand. If you see something that you like, you may face some competition, especially if it's brand new on the market. We are seeing the new properties on the market getting heavy showings, multiple offers. Are they going above the list price like they were a few years back? In a couple of cases maybe, but they're going under contract for healthy prices pretty close or at the listing price because it's competitive. And if it's a property that's been on the market, let's say 60 or 90 days, you might have some opportunity to perhaps negotiate up the listing price, but it would be a mistake to think that you need to get 5 or 10 or 20% off the listing price in order to make it a good deal. It's just not the case. As a matter of fact, sometimes the listing price is a great price, and you just need to recognize what's going to make sense and why you should be working with a pricing expert. So if you fancy yourself as a pricing expert, well, then you probably don't need the help of an expert realtor. But if you do, or if you're not sure, take advantage of that. The misstep that you might make trying to save a percent or two here or there could cost you, literally thousands down the road. So just be careful with the pricing. It's pretty tight right now, and the pros, they know what's going on, and you can definitely spot a pro. If it's somebody selling a couple homes a year, it's probably not a person who's had enough at-bats to really make a reasonable estimation, let alone a great estimation of what's going on with the market. The ones that are selling hundreds of deals per year, they're doing enough negotiating and pricing to know where that stands. So more than ever, pay attention to the home valuations that are being given to you. And as we say, trust, but verify. It just means not to trust the first thing that you see. Verify. Make sure the comps are solid. Make sure that if you're making that investment, that it's going to be solid. We can't tell you if the price is going up or down or sideways, but we can tell you if it's a good deal today. And most of the times, if you're an investor, you make your money at the acquisition. That's where you make your money. And if it's saleable down the road, then that's where the profits lie. And if you pay the wrong price or you buy the wrong house at the beginning, there's no amount of makeup that can fix that down the road. So be watching that piece. So again, the listings, where are they coming from next? Well, it's as simple as thinking this. If you're a home buyer and you're looking at vacant homes or having a virtual tour, your risk is minimal. And if you're concerned about COVID, your risk is probably minimal. For a seller, it's a whole different equation. They have to begin to be comfortable with allowing people in their homes during troubled times. It's the quick and easy to say, look, hey, I'm okay going in your home, but I don't want you to come into my home. And that's the seller's dilemma. How do they overcome that? That concern. I don't want to use the word fear. I'll just say concern. But it's uncomfortable to have anybody coming in your home right now. And for those that can overcome that, there's buyers out there. I think they'll get a premium on their pricing. And for those that wait a little bit, they might still do okay in the market, but it's uncertain. If prices were to change or drop, and again, I don't feel that they are, I think it's somewhere down the road, what would have to happen is that buyers suddenly decided they didn't want to buy properties, or perhaps the interest rates got to a point where it seemed less affordable, Or maybe there's overlays on the mortgages where instead of having a DTI, debt to income ratio, of 45 or 50%, if the bank ratcheted down with an overlay and say, hey, your debt to income ratio can't exceed 30%, because we had some of this back in 2008 going on. You might have great credit and a great down payment, but if your house payment, your car payment go above 30%, you might not get the loan. So that could change things. So bank overlays could be something big. Interest rates increasing could be big. The other factor is at some point sellers would get comfortable. And if the buyers slow down at a point in time where the sellers sped up, we could be in a situation, I'll just say similar to 2008, not like 2008, but just similar. What happened in 2008 is we had a bunch of homes with no equity and a lot of homes on the market and just a few buyers. See, right now we have hardly any homes on the market. Interest rates half what they were in 2008, and we have lots of buyers. So it's nothing like 2008. Now, could that change in 3, 6, 12 months down the road? Of course it could. We're going to have historic elections coming up this year, and I'm not someone's going to predict what's going to happen with that either. I'm going to stick to the real estate space and stay in my lane right now because there's a lot of things that could change the outcome of the real estate industry and the values of the properties. It's never a real estate event that causes prices to go up or down. It's some other form of pressure, exterior. We had a pandemic, and that certainly affected the way that homes are sold, at least by the number of homes, but it didn't change price. Now, if there's an economic event, that could change things. Affordability could be affected by interest rates. Increase in selection could cause buyers to take their time, and there's less urgency. Right now they might only have 1 or 2 properties that really fit their criteria. If they have 15 or 20, which again was 2008, they got their pick of the litter. They can take their time, make offers. If they don't get one, there'll be a similar one, maybe for a far better price. Maybe that one gets sold. As properties move up, values go up, and it's usually a gradual thing. If there was a time where somebody sold for dramatically less, the way down is a lot faster. And so the example would be $200,000 house, and they're all selling for $195, $200, $205. They're trending upwards. When someone sells at $175, whatever the reason for the anomaly, a couple things happen. The buyers are thinking, hey, that one just sold for $175. I think I would like to get that one for $175. And maybe the next seller, the best they can do is somewhere between $175 and $200. And you bake a few of those into the cake, and what happens is when a buyer's financing and they're willing to pay $200 for a house, but the appraisal comes back at $180, $185, $190, difficult decision. Either the buyer's got to come up with some excess capital, which they may not have, and they may not want to pay $200 for a house that appraised at $190 or $185. And will the seller be willing to take 10 or 15 less just to make the deal happen? Well, there's some point of capitulation, but as those comps stack up to the negative, it creates a lower base point, and the achievable number at 200 becomes 195 or 190. Now, no one's saying this is going to happen, but that's what it looks like. So if you're a seller and you're concerned about going on the market, what is your downside? Well, time may not necessarily be your ally. Right now there's buyers with pent-up demand are looking for properties, and everything's lined up for the sellers to do really well in this market, minus the discomfort of being on the market. And if we continue to have low inventory and low rates, then for the foreseeable future the sellers will have a little more control than the buyers. Should it begin to tip, and this is what we want to watch, your leading indicators that you want to watch, it's absolutely inventory numbers. Are they increasing or decreasing? Interest rates, increasing or decreasing. Those are your levers. And if you see an increase in rates and an increase in homes available inventory, you're going to see some downward pressure on price. That's what it would look like. But until you see that, there's no reason to believe that prices are going to drop. And that's kind of the piece we have to look at right now. So coming back full circle, if you think the bottom's dropping out of the market, the fundamentals say no. But the leading indicators are going to teach us which direction the next phase will be. The next couple of months right now look like it's business as usual. Maybe we're a little more concerned as we get to third quarter, fourth quarter this year. So right now the beat just goes on. In the agent community, this is interesting. It's almost euphoric. We went through a pause, and I can see it. It's business as usual for buyers and the agent community. There is definitely among the agents some consolidation happening. We see people making a move to from individual agents to join in teams or brokerages functioning like a team. We see some brokerages consolidating, and I believe that will continue across the industry. The cost of business is definitely has gone up, and technology, it's advancing so quickly. I'm not saying the single agent doesn't have a chance. What they have is more things to do than they ever have before, and more expenses than they ever had before, and margins are being compromised. So the individual agent certainly can succeed, but it's gonna look different and feel different. In my business, I talk to agents all the time because we're a growing company, and you have to wonder sometimes. Not every agent right now is fundamentally sound, and I don't mean that as a dig on an agent. How many people have taken the time, the studying, and like an apprentice, pay the dues and the time to really learn transaction after transaction of being mentored by a top level broker to be fundamentally sound. It just happens when the number of agents in the last 10 years has doubled. Not everybody had the same training. And again, it's not a shot at those agents, but there's an opportunity out there. In this consolidation period, there are a number of leaders willing to take on apprentices and help them to become more fundamentally sound in the business, to help them grow and become high producing agents. It's just going to look a little bit different. It's a uncertain time pretty much for all of us in some way, shape, or form. And we find in our daily business that things are creeping up on us, and sometimes people might get, sparky and barky with you. How's that for a term? Well, it may just be something else manifesting it, whether it's at home or socially or personally, that's showing up in other places. So, as a real estate professional, if you're experiencing something where a client's a little bit on edge or a little bit nervous and perhaps says something to you that they apologize for, an hour later, it probably wasn't the agent or probably the situation or even the price. It could have been something else just showing up at that time. So as a community, between the brokers and agents in the real estate space, I think we just need to have a little more understanding for the people that we're actually trying to help. And sometimes we just actually need to be helpful and understanding, empathetic perhaps. Just understand that there's a lot of pressure. I mean, when you think about it, with everything going on right now, some people are in a situation where they most likely feel they have to move, and it has to be one of the most uncomfortable things to move in the times that we're in right now. So I would say a little more understanding and a little more empathy and a lot more knowledge. Not every real estate fundamental is about cost per square foot and what's the cap rate and how to calculate those numbers. Sometimes it's a human component. It's how we treat each other, and it's how we help each other. So, for this week, I'm going to leave you with a positive message that it sure appears there's some change on the way, and change can be uncomfortable, but change can end up being good. And I'm optimistic, in our people. I think at the end of the day, there's a lot of good people out there that are struggling to learn, just what the right thing is right now. But I feel like we're going to get there. So that's what I have for you this week. And love to hear your comments, and we'll talk soon.